Have you ever wondered what's driving the current trends in the stock market? Let's take a closer look. The stock market, a dynamic and ever-changing landscape, is currently experiencing some intriguing shifts. As of today, stock futures indicate a steady forecast with the S&P 500 on the brink of an impressive milestone, hovering just below the 5,000 mark. But what could be influencing this trend? The answer lies in a blend of factors: corporate earnings, bond market sentiments, and the ripple effect across global markets. Corporate earnings can act as catalysts for change, with companies like Disney and ARM Holdings stealing the spotlight. Bond market sentiments also play a significant role, with the tranquility in this sector aiding the S&P 500's rally. And let's not forget the impact of global markets, navigating through turbulence and triumph. Stay tuned as we delve into these factors one by one. Ever thought about the role of corporate earnings in stock market trends? It's a dance of numbers, really. A fascinating interplay of profits and losses that can nudge markets this way or that. Take Disney, for instance. Their recent financial revelations have infused a sense of optimism, a positive ripple that's making waves in the market atmosphere. This, despite PayPal's earnings report falling short of expectations. It's a tale of two companies, underscoring the diverse trajectories within the stock market. Then there's ARM Holdings, the chip designer riding the artificial intelligence wave. A remarkable 20% surge in their shares has buoyed the S&P 500 and Nasdaq indices, highlighting the pivotal role of innovation in stock market dynamics. But remember, this isn't the whole story. Corporate earnings, while vital, are just one part of a larger, more complex equation. But corporate earnings are just one piece of the puzzle. Are bond markets really the calm in the storm of the stock market? To answer this, let's take a look at the recent bond auction held by the Treasury. This event, met with enthusiastic demand, is a testament to the tranquility that currently pervades the bond markets. This calm atmosphere is proving to be instrumental in supporting the rally of the S&P 500. Now, what's behind this calmness? It's a combination of changing market expectations regarding inflation and Federal Reserve rate adjustments. The market, it seems, is becoming increasingly comfortable with the prospects of inflation. This shift in sentiment is due in part to recalibrated expectations for the Federal Reserve's rate adjustments now anticipated to kick in around May. So the bond market, often perceived as less volatile, has indeed been a beacon of calm amidst the stormy seas of the stock market. Yet it's not just the local factors that influence the stock market. How do global markets navigate through turbulence and triumph? Let's take a closer look. Chinese stocks, for instance, have faced a setback due to deepening deflation, leading to a slight dip in the Hang Seng Index. On the other hand, Japanese equities have shown resilience, riding on the wave of SoftBank's ascent and promising projections from the Bank of Japan. This has manifested in a noticeable increase in the Nikkei 225. Now, turning our gaze to the early market movers, ARM Holdings stands out with its optimistic Q4 revenue forecast, surpassing expectations and driving its US-listed shares up by a significant margin. Similarly, Bluebird's sales surge and Confluent's ambitious revenue guidance have sparked considerable stock price increases. Disney, too, continues its trajectory of success, with its global streaming subscriber base and ambitious plans contributing to a notable stock price uplift. So the next time you look at the stock market trends, remember it's a mix of corporate earnings, bond market sentiments, and the ripple effect across global markets. In the world of stocks, it's all about making informed choices. As we see from the examples of ARM Holdings, Bluebird, Confluent, and Disney, understanding the factors that drive stock prices is crucial. It's not just about corporate earnings, but also about market sentiment, global trends, and even the impact of individual companies on their respective industries. By keeping an eye on these elements, you can navigate the stock market's waves of turbulence and triumph. Remember, knowledge is power, and in the stock market, it can also mean profit. So, stay informed, stay vigilant, and stay ahead of the curve. And before we move on, we'd like to remind you, don't forget to like, share, and subscribe to our YouTube channel for more deep dives into the stock market. Your support helps us continue to provide you with insightful analysis and updates.